Well, this morning, before we even opened up our daytime trade, USDA said we had an overnight export sale to talk about, and this time it was related to corn. Now, one had to wonder when that first hit the wire how much kick we would get out of that when it came to the corn trade today. We had corn sold in the amount of 1.02 million tons, and it was to China. So there is a little bit of a story behind it because it was for new crop delivery. Now, we also had reported that China canceled 280,000 tons of old crop corn. So just like what they did last week, we think, they had rolled over into the new crop month for the delivery period, just shoving the purchases back. And in this case, they're actually adding to them a little bit as well. So that all came out before the open. Also, we had some new grain export inspection numbers that came out a short time ago, about an hour ago. And in those, we had corn at 1.71 million tons compared to 2.21 million the week before. So a little bit of a decline, but still pretty strong. We had soybeans, 236,900 tons compared to the 144,000 the week before. And the wheat at 545,587 compared to 532,000 the previous week. It has been a down day, though, in the grain market. So let's take a look at corn right now. And our quotes provided by Bar Chart. You have that July contract on the corn, seeing a loss of 17.75 cents now at 714.5. That's a new low for the day. We had been as high as 730.75 last night. December down 24.75 at 611.75 per bushel. They're really getting after them here on the corn market now as they continue to push the downward side. Soybeans, July down 4 cents at 15.8575. November down 22 though at 14.11.5, almost on the low of the day. Well, what about the wheat? Wheat has had some big time losses today. In Chicago, July down 30 cents now at 731.75 per bushel. Kansas City, not to be outdone, it has been down sharply too. It's down 29.25 at 707.5. And Minneapolis wheat has been leading the charge to the downside. We're down 39.25 cents at 758.25 per bushel. Let's bring in Todd Bubba Horwitz of BubbaTrading.com, based in Chicago. And Todd, this is, I guess you would have to call it a correction, but it's a pretty sizable correction all in one day.
Good morning, Mark. Well, look, you cannot go straight up in any market. And, a natural pullback is a part of the business. And you're going to see some selling. You're going to see either some profit taking or some getting out. Let's see the reaction. I would say to me, this is still just another buying opportunity. I think there's a lot more room to go on the upside. And I think that you're going to see these bigger sell-offs because, of course, the higher price gets, the more volatility that's involved. So, to me, it's a sell-off. It doesn't feel good, but certainly, if you look from where they came, it's virtually a very small sell-off in the big picture.
Well, I know you had cautioned about this very thing last week, I believe, when you were talking with us, and the fact that it could happen, especially ahead of a major USDA report. I know you don't like to read a lot into the reports. You usually figure the market already knows about what will be in the reports by the way it's acting. But what are the markets telling you about this year's crop? What do you think we'll have like for crop progress and condition today?
Well, I mean, I think that you're probably seeing the market's overdone into the report. And I think that I think there's a greater chance of a bounce from that report than there is a continuation of sell-off. I think that, this is kind of what happens in today's world where we get a little bit too aggressive. And the other issue is that everybody's got access to pushing buttons and executing themselves immediately. And I think that creates a little bit of fear. So I think the reports are probably going to be solid. And, right now it's appearing that they will be bearish, but I don't think that's going to be exactly right. But that's what the markets are looking at now. And I think, as usual, I think they're probably a little bit overdone.
Okay, we'll jump over to the livestock side here in just a moment. We're talking with Todd Bubba Horwitz. We'll have more when we come back. Now to the livestock trade we go, and we had new information that came out just mere moments ago from USDA, and I wanted to share it with you. Remember, we were talking about the beef cutout values Friday afternoon that had stabilized and went mixed. They kind of went flat, if you will. Let's see what they did this morning. Did they resume their uptrend? They did. Choice cuts this morning up $1.64, now all the way up to $307.52 per hundredweight, and selects were up $3.28 this morning at $293.55. Can the pork follow suit? Let's take a look. Carcass values this morning up $1.98 at $115.77 per hundred. The loin values did go down by $3.88, but that ham market that a lot of people watch, that was $4.87 higher at $96.18, and the belly market up $4.85 this morning. Let's see what the futures are doing. Do they reflect this? Well, let's find out. In the live cattle board right now, and our quotes from bar chart, we have the June futures $2.12 higher at $118.15, within 15 cents of our high of the day, and off of our low, I might add, by over $2. And August up $1.02 at $119.87 right now. On the feeder cattle market, switching over there, we have the August contract up $3.70. We're all the way up to $147.97 after a low today of $145.47. How's that? That's a $4.50 rally off of the low. We had a high that's about 20 cents higher than where we are right now, but $3.70 higher on the feeders. On the lean hog trade, going over there, we will take a look at that May contract, which is down 15 cents, June down 80 cents at $112.05. But I will add that's about $1 off our earlier low today. Let's go back to Todd. Todd, that's quite a bounce here in the cattle market. You were kind of expecting this to happen, though.
Good morning, Martin. Again, yeah, I think that, you figure to get a dead cat bounce, or as you called it, a dead calf bounce at some point. And, you cannot be under this kind of pressure and not expect some sort of a pullback. I mean, it would be the opposite, of some profit taking from those who were short. Now, I would still think that they're still a little bit negative, and it is like the tale of two cities, because the hogs are still very positive, although a little bit lower today. But I mean, in the cattle markets, look, I think we're going to get a much bigger move to the upside. But for the moment, we have to remain slightly negative, because the price action just tells us that there could be some room to go to the downside further. And you expect these bounces when you see very dramatic days down, day after day, down after down. And I think that's what we saw.
Todd, great information. Thank you for joining us. Appreciate it. We'll talk with you again real soon. Todd, Bubba Horowitz. He's with BubbaTrading.com in Chicago. Tammy, what a day. Back to you.